Hello fellow boomers, welcome to AI for Boomers channel. In today's video, we delve into how AI is transforming finance. Our financial markets and our economy are major and critical pillars of our society, and artificial intelligence is completely transforming them. There is no reason for you boomers to be left behind, so stay with us until the end of this video because it is crucial to understand these developments, learn how to behave, and keep on in this new technological environment. Falling behind is not an option even if you are a boomer. Imagine waking up tomorrow and discovering your investment portfolio has crashed because an AI made a split-second decision, or receiving a financial document you can't understand, generated by an automated system. These aren't sci-fi scenarios anymore, they're our reality. This invisible revolution is happening right now, often without most people even realizing it. Algorithms are making billion-dollar trading decisions in milliseconds, and these changes affect all of us. Just a few decades ago, trading floors were chaotic spaces filled with shouting traders using hand signals to buy and sell. Today, they've been largely replaced by quiet server rooms where AI systems execute thousands of trades per second. As a matter of fact, the financial world as we know it is undergoing a revolution, and artificial intelligence is at its heart. In the last decade, we've witnessed a complete transformation of financial markets. Gone are the days of crowded trading floors and paper transactions. Today's markets run on sophisticated networks, automation, and algorithms that operate at speeds humans simply can't match. This isn't just an upgrade of old systems, it's a fundamental reimagining of how markets function. Electronic communication networks and automated trading systems have replaced traditional structures, with advanced technology now making financial decisions aimed at maximizing profits while minimizing risks. As technology races forward, artificial intelligence has emerged as the defining force reshaping our financial landscape. Its impact reaches into every corner of the market, from how trades are executed to how investment decisions are made. AI isn't just changing how we interact with markets, it's completely redefining their core structure and mechanisms. The algorithms powering today's financial systems can process massive data sets in milliseconds, spotting patterns and opportunities invisible to the human eye. High-frequency trading represents one of the most dramatic applications of this technology. AI-powered systems analyze market conditions and execute complex trades at literally the speed of light. What once took hours or days now happens faster than you can blink. But trading speed is just the beginning. Today's AI systems process complex financial instruments, analyze vast historical data sets, predict potential risks, and weigh countless variables when making investment decisions. They've also revolutionized security, with sophisticated algorithms constantly monitoring for fraudulent activity and detecting the slightest anomalies in financial transactions. We're not witnessing a simple technological upgrade. We're living through a complete reimagining of global finance, powered by artificial intelligence. On May 6, 2010, the financial world witnessed something unprecedented: the flash crash. In just 36 minutes, the Dow Jones plummeted nearly 1,000 points, erasing almost 10% of its value before rebounding almost as quickly as it fell. What made this crash different wasn't just its speed but its cause. For the first time, algorithms, not humans, triggered a market-wide panic. High-frequency trading systems reacting to unusual market signals began selling aggressively, creating a cascading effect as other AI systems detected the sell-off and joined in. The crash exposed the hidden vulnerability of our modern financial systems, how interconnected AI trading programs could amplify market movements at speeds impossible for human intervention. While markets recovered that day, the flash crash forever changed how we understand market risk in the age of artificial intelligence, forcing regulators and financial institutions to reckon with the reality that the markets were no longer controlled solely by human hands. The flash crash of 2010 demonstrates these dangers perfectly. AI systems can all react to the same signals at once, creating a cascade effect that human traders can't control. But AI isn't just about trading speed, it's transforming risk management too. When it comes to managing financial risks, artificial intelligence is completely changing the game. Think about traditional risk management for a moment. For decades, financial institutions relied on historical data to predict what might go wrong in the future. It worked, until it didn't. These models simply couldn't keep up with our fast-moving interconnected markets. Today's AI systems don't just look backward, they assess risk in real time, processing an incredible range of factors simultaneously. While human analysts might focus on a handful of indicators, AI examines everything from global economic trends and political events to the subtle patterns in investor behavior across markets. The results are remarkable. Take credit risk, for instance. Deep learning models can now predict who might default on loans by analyzing intricate patterns in borrowers' financial behaviors, detecting subtle signals that traditional statistical models would miss entirely. What once required teams of analysts can now happen automatically, with greater accuracy and at scale. But the true power of AI lies in its adaptability. These systems continuously learn and evolve, refining their risk assessments as market conditions change. We saw this in action during the COVID-19 pandemic. While traditional models failed in the face of unprecedented market disruption, AI systems quickly recalibrated, helping institutions navigate extraordinary uncertainty. Yet this power comes with its own risks. Many AI systems operate as black boxes. Even their creators can't fully explain how they reach specific conclusions. This lack of transparency raises serious questions. There's also the danger of algorithmic bias. If the data used to train these systems contains historical prejudices, AI might perpetuate or even amplify them. The financial world now walks a tightrope, balancing the incredible predictive power of AI against the challenges of trusting decisions to systems we don't fully understand. As we navigate this new landscape, one thing is certain: the firms that master this balance will define the future of risk management. AI has also transformed fraud detection and compliance in financial markets, providing more advanced tools for monitoring and regulatory adherence. AI-driven fraud detection systems utilize machine learning algorithms to detect unusual transaction patterns that may indicate fraudulent activity, such as money laundering or insider trading. These models are capable of processing large data sets from multiple sources, allowing for a more comprehensive view of transactional flows and enabling quicker responses to suspected fraud. Anti-money laundering, AML applications in particular, have benefited from AI's capacity to detect anomalies within complex, high-volume transaction networks, increasing the accuracy and efficiency of AML compliance. Beyond fraud detection, AI also aids financial firms in meeting regulatory requirements by automating compliance processes. Regulatory technology, RegTech solutions, use AI to monitor adherence to the impact of artificial intelligence on financial markets for financial regulations, helping firms avoid fines and reputational damage. For example, AI systems can analyze regulatory texts and extract relevant compliance information, reducing the time required to implement regulatory changes. However, the use of AI in compliance is not without challenges. The black box nature of certain AI models can complicate regulatory transparency, making it difficult for firms to explain compliance-related decisions to regulators. Despite these limitations, AI remains a critical tool in enhancing the robustness of fraud detection and compliance systems across the financial sector. As we mentioned before, AI systems can process information from thousands of sources simultaneously, spotting patterns humans could never detect. It's like comparing a telescope to the naked eye. Yet this raises serious concerns about transparency and accountability when billions of dollars in people's financial futures are at stake. The financial world isn't just adopting AI, it's being completely reinvented by it, and what we've seen so far is only the beginning. The next wave of financial AI is taking shape in the form of hybrid models, powerful systems that combine cutting-edge machine learning with traditional statistical approaches. These hybrids offer the best of both worlds: the raw processing power of AI to handle massive unstructured datasets, alongside the transparency and explainability that conventional models provide. This balance addresses one of the biggest concerns about AI in finance: the notorious black box problem, where even developers can't explain how decisions are made. We're also witnessing the emergence of real-time risk management systems that operate on an entirely new level. Today's AI mostly focuses on credit risk and fraud detection, but tomorrow's systems will constantly monitor global economic indicators, detecting early warning signs of financial crises before they happen. Imagine AI that can sense market turbulence brewing and adjust risk forecasts instantly, potentially preventing the next financial meltdown. Perhaps most revolutionary is the convergence of AI with decentralized finance or DeFi. These blockchain-powered platforms, enhanced by artificial intelligence, are creating financial systems that operate without traditional intermediaries like banks. As this technology matures, AI will automate increasingly complex transactions with greater security and efficiency than ever before. For everyday investors, personalized financial AI is becoming increasingly sophisticated. Robo-advisors will soon integrate real-time market data with your specific financial goals and risk tolerance, offering truly customized investment strategies. Beyond investments, AI will provide personalized insights into your spending habits, saving strategies, and financial planning, essentially democratizing the kind of financial advice once available only to the wealthy. But this bright future comes with a critical caveat. As these systems become more powerful and ingrained in our financial lives, we must balance innovation with ethical considerations. The questions of data privacy, algorithmic bias, and equal access to these advanced financial tools will determine whether AI creates a more fair and inclusive financial system, or simply reinforces existing inequalities. AI integration in finance creates significant regulatory challenges. How do we regulate technology that evolves faster than laws can be written? Legislators and regulators are struggling to catch up. The SEC in America, financial authorities in Europe, and court administrators worldwide are trying to create frameworks that protect people without stifling innovation. This isn't easy. Traditional regulatory approaches assume transparency and human decision-making. AI challenges both assumptions. So where do we go from here? How will future investors behave in this rapid-changing environment? First and foremost, it depends on the financial and digital education and literacy of investors. Think of having a financial advisor in your pocket, available 24/7, that never judges your questions and explains complex concepts in exactly the way you need to hear them. This isn't science fiction. It's the reality of how AI is transforming financial education right now. For decades, financial education has been trapped behind barriers, expensive seminars, dense textbooks, and jargon-filled lectures that leave most people more confused than when they started. The result? Financial literacy remains a privilege rather than a right, with millions unable to access the knowledge they need to build wealth and security. AI is shattering these barriers. Models like ChatGPT are democratizing financial knowledge in unprecedented ways. Trained on vast financial datasets, these AI systems can explain everything from basic budgeting to complex investment strategies in plain, understandable language. The days of being intimidated by financial jargon are coming to an end. What makes this revolution truly powerful is personalization. Unlike traditional one-size-fits-all approaches, AI analyzes your specific situation, learning style, and goals to create customized learning paths. A college student, a new parent, and a pre-retiree can all ask the same question about saving money, and each will receive guidance tailored precisely to their circumstances. And let's be honest, traditional financial education can be, well, boring. AI is changing this through gamification, turning financial learning into interactive experiences that feel more like playing than studying. Imagine learning about compound interest by growing a virtual investment forest, or mastering budget management through engaging simulations. Studies show these gamified approaches dramatically increase engagement and knowledge retention, especially among younger investors. The potential impact is massive. When people understand how money works, they make better decisions, build more wealth, and contribute to a healthier economy overall. Of course, challenges remain. AI systems can sometimes perpetuate biases found in their training data, and they require continuous updates to stay accurate. But as these technologies evolve, their ability to provide personalized, accessible financial education will only grow stronger. The future of financial education isn't in exclusive seminars or dense textbooks. It's in the AI-powered tools that make financial wisdom available to everyone, anywhere, at any time. Perhaps the most promising approach is keeping humans centrally involved. AI can process data and suggest options, but critical decisions should include human judgment. Think of it like autopilot in an airplane. The technology can handle routine operations, but the pilot remains ultimately responsible and can take control when needed. Yet this is easier said than done. In the lightning-fast world of AI-driven finance, keeping humans meaningfully involved presents a nearly impossible challenge. When algorithms make critical financial decisions in milliseconds, faster than you can blink, human oversight becomes more theoretical than practical. Imagine trying to supervise a system that executes thousands of trades before you've even processed the first one. This fundamental mismatch in processing speeds creates a supervision paradox. By the time a human could identify a problematic trading pattern, millions of dollars might already be gained or lost. Financial institutions face a precarious balancing act, implementing circuit breakers and risk parameters that algorithms must follow, but these guardrails are themselves designed by humans with inherent biases and blind spots. As markets grow increasingly interconnected, the butterfly effect of algorithmic decisions ripples through global systems at the speed of light, potentially triggering cascading failures before human operators even realize something has gone wrong. This raises profound questions about accountability and control. If we can't meaningfully oversee these systems in real time, can we truly claim to be in charge of our financial future? What is your opinion? Can humans be in charge? Please share with us in the comment section below. Artificial intelligence isn't just changing the financial world, it's completely transforming it from the inside out. In the span of just a few years, AI has revolutionized how markets operate, supercharging trading efficiency, completely reimagining risk management, and creating detection systems for fraud that human analysts could never match. Today's AI-powered algorithms process and analyze data at mind-boggling speeds, enabling high-frequency trading that executes thousands of transactions per second, far beyond what traditional methods could ever achieve. But the impact goes deeper than just speed. These systems can process massive, diverse datasets to uncover hidden patterns in customer behavior, allowing financial institutions to create hyper-personalized services that truly connect with clients. Yet this technological revolution comes with significant challenges. As markets become increasingly AI-driven, questions arise about market stability, ethical boundaries, and regulatory oversight. Perhaps most concerning is the black box problem. Many advanced AI systems make decisions through processes so complex that even their creators can't fully explain them. This lack of transparency creates a serious dilemma for both financial institutions and regulators trying to maintain control and accountability. The path forward requires intensive research focused on making AI more interpretable and establishing clear ethical guidelines that prevent algorithmic bias from disadvantaging certain groups. Financial and digital education must become universally accessible, ensuring no one is left behind in this new landscape. As artificial intelligence continues its rapid evolution, addressing these challenges will determine whether its tremendous benefits flow equitably to everyone across the financial sector, or remain concentrated in the hands of a few. The changes bring tremendous benefits: faster transactions, better risk management, more accessible legal services, but also profound challenges that society is still learning to address. What's clear is that these systems aren't just technical problems for experts to solve. They raise fundamental questions about fairness, transparency, and human oversight that affect all of us. The revolution is happening now, often invisibly, in the algorithms processing your loan application, managing your investments, or handling court filings. Understanding these changes isn't just interesting, it's essential to navigating our AI-powered future. Thanks for watching. If you found this valuable, please like this video, share it with your friends and family, and let us know your thoughts and insights in the comment section below. Also, if you haven't done so yet, now is the perfect time to subscribe to our channel. Until next time, keep learning and make sure you stay informed. By doing so, you'll know how to navigate through the huge transformations we are all experiencing.